All right, today we're putting on our detective hats and digging into a stock that has been on an absolutely wild ride, ASST. We've got our hands on a pretty dense technical report, and we're going to break it down to see what clues the charts might hold about its next big move. So let's get right into it.
So here's the big mystery we're trying to solve. ASST shot up over 130% and then, poof, gave a huge chunk of it right back. So the question on everyone's mind is it about to take off again, or is this thing headed for a crash landing? That's what we're here to investigate.
And to figure that out, we're going to treat this just like a case file. Our main piece of evidence is this technical analysis report. We're going to sift through all the data, follow the clues one by one, and see exactly what story the numbers and charts are trying to tell us.
Okay, first things first, let's set the scene. The subject of our investigation, ASST, is what you'd call a penny stock. And, like a lot of penny stocks, its history is, well, let's just say it's a history of extreme, gut-wrenching volatility. And this timeline, wow, it really shows you what we're talking about. I mean, after just kind of sitting there for a couple of months, the stock just exploded in late October. It rocketed from 78 cents all the way to a peak of $1.81. But just as fast as it went up, it came tumbling back down. This is what's known as a classic pump and fade, and that event is really at the heart of what we're looking into today. And get this, on that single peak day, over 1 billion shares were traded. 1 billion. That is just a massive, massive amount of activity. It tells you that a huge wave of speculation is what fueled this spike, and it absolutely screams high risk. Okay, so let's officially start our investigation. The very first clue we need to look for is the most basic one. Which way is this stock generally heading? In the world of analysis, we called this the trend. Let's see what the evidence says. Now, our main tool for figuring this out is something called moving averages. Honestly, the best way to think of them is like a compass for the stock. They just smooth out all the day-to-day chalkiness and help us see the bigger picture, the real underlying direction. But, and this is a big but, here's where things get tricky. The moving averages are telling two totally different stories. See, in the short term, the price is sitting nicely above its average, which looks pretty bullish, right? But then you zoom out, and oh boy, the price is way, way below the medium and long-term averages. So what this is really telling us is that we're seeing a little short-term bounce inside of a much bigger, much stronger downtrend. And it's not just the moving averages. A bunch of other trend indicators in the report are pointing the same way. Now, without getting lost in all the technical jargon, these things basically just confirm that, yep, sellers are the ones in control right now. So the big takeaway here, despite that recent exciting pop, most of the hard evidence says the overall trend is still pointing down. All right, on to the next piece of the puzzle, momentum. So if the trend tells us the direction of the car, momentum tells us how hard the engine is working. Is this stock's engine just getting warmed up, or is it already running on fumes after that big race? Well, our first clue here isn't great news if you're hoping for another surge. The report's pretty clear that most of the key momentum indicators are negative. This suggests that all that buying pressure that caused the huge spike, well, it's getting weaker. The upward force seems to be fading out. But wait, every good detective story needs a twist, right? A very specific indicator, the stock RSI, is flashing an extreme oversold signal. Now, this is a potential counter clue. It could mean the recent sell-off was so fast and so aggressive that it was maybe a little overdone, and that could mean the stock is due for a little relief bounce. So now we've got some real tension in our story. So now it's time to, read the fine print. We're going to look at the stock's personality, how risky and volatile it is, and we're going to dig into the trading volume to see who's actually been doing all the buying and selling. And the first warning label here is crystal clear. This thing is volatile. The report's main volatility metric is sitting at over 16%, which is really, really high. This is pretty typical for a penny stock after a giant run-up like this, and it basically means you have to be prepared for huge, sudden price swings, up or down. So who's actually making these trades? The volume clues tell a really interesting story. One indicator shows that a ton of buying pressure came in during that big pump. Makes sense. But another one shows that selling pressure has been dominant ever since the stock peaked. So what does that suggest? It suggests the people who got in early and rode the wave up are now probably taking their profits and selling. Okay, we've gathered all our clues. We've looked at the trend,
the momentum, the volatility, and the volume. So now it's time for the final act. We're going to put all these pieces together and see what the analyst's final verdict is. So the report kind of boils all of this down into one technical score, which comes in at about 45%. You can think of that as neutral, leaning towards bearish. The main things dragging it down are that bearish trend and the negative momentum we uncovered. The other stuff like volume is a bit more neutral, but not enough to tip the scales. So the whole analysis really comes down to these two potential futures, defined by two critical price levels. The bullish story gets going if the stock can break above the resistance at $1.43. But the bearish story takes over if it falls below the support level at $1.31. That could open the door to a drop to $1.20 or maybe even lower. These are the key lines in the sand to watch. And here it is, the analyst's specific recommendation, straight from the report. And notice the first two words, high risk. The strategy they lay out is purely speculative. It's either trying to buy a dip down to that 131 support level with a very tight safety net, or, on the flip side, betting against the stock if it rallies up to 143. This just hammers home how speculative this whole situation is.
And this might be the most important takeaway of all. This entire investigation, every clue we've looked at, it's all based on interpreting patterns from the past. It's an analysis, not a crystal ball. And it is absolutely not financial advice.
Which kind of leaves us with one last big question to think about. Is this kind of deep technical dive a reliable map to where a stock is going next? Or is it just a really detailed, well-organized history lesson about where it's already been? Something to chew on. Thanks for joining the investigation.